very good morning. You're watching News 9. I'm Karthik Malhotra and this is Morning Brief at 9. Well, Delhi has got its new Chief Minister. Rekha Gupta has taken oath as Chief Minister of Delhi yesterday. She continues to retain the two critical portfolios of both revenue as well as finance for the state. But the big question that we are asking today is that can Delhi afford what it promises to welfare schemes in the run-up to the elections? That's the big question we will be discussing and trying to address and get answers for you with Gopal Krishna Agarwal. Also on the show, we will look at how long will investors continue to reel under the pain from the stock market crash, and is this really a bear run for India? We discuss that with Amit Kumar Gupta on the show later. You're watching Morning Brief at 9. This is Morning Brief at 9. First up, let's start with the headlines. Delhi Chief Minister Rekha Gupta keeps revenue and finance portfolios, but with BJP's bold promises of welfare programs, we ask, can Rekha Gupta afford them? Meanwhile, Uttar Pradesh Chief Minister and the UP government has announced and presented the state budget for 2025. 8 lakh crore rupees of allocation, AI City in Lucknow, scooty for girls and shelter for cattle announced. There's continuity in India's economy, research and planning as Chief Economic Advisor V. Anant Nageswaran gets a tenure extension of 2 years until March 2027. Stock markets are down 13% from September's all-time high. This year alone, Sensex has crashed over 3%, while small caps take the biggest beating of 21% since Jan 1st. How long will investors be expected to bear the pain? We discuss on the show. And as markets tank, safe haven investment gold touches lifetime high of over 85,400 rupees per 10 grams in India. Should you add more gold to your portfolio? We'll try and get you an answer to that on the show. Indian refiners have cancelled orders of 70,000 metric tons of crude palm oil or CPO scheduled for delivery between March and June this year, owing to surge in benchmark Malaysian prices and negative refining margins here in India. Director General of Civil Aviation has submitted a roadmap to Delhi High Court proposing more weekly rest for pilots from 36 hours presently to 48 hours starting as soon as July 1st. Reduced night flying also from November 1st on the roadmap. And after iPhone maker Apple, it's now the turn of Google, as Google is now all set to open exclusive retail stores in India. Remember, the company sells its Google Pixel phones through resellers and online partners at present. And in a big corporate development, Dabur's family, the Burmans, finally take control of Relicare after an 18-month-long battle of ownership with Rashmi Saluja. Directors to be named after RBI's approval. Delhi's newly elected Chief Minister Rekha Gupta has reaffirmed her commitment to fulfilling key promises made in the BJP Sankalp Patra, among them providing 2,500 rupees per month in financial aid to women, with the first installment expected by March 8th, that is International Women's Day. At her swearing-in, expectations were high as people awaited details on major welfare schemes, including the subsidized LPG cylinders by up to 500 rupees, a 10 lakh free medical insurance, and the Jahan Jhuggi Wahan Makan housing initiative. But with the assistance amount now increased to 2,500 rupees per woman in the state belonging to economically weaker sections, the financial burden of the state is expected to surge by 15,000 crore rupees, raising concerns over how the BJP-led government will fund these ambitious schemes. Now, analysts say with Delhi lacking finance commission grants, all eyes are now on the government's budget. Will the capital's new leadership find a way to deliver? We will get you, or try to get you, at least answers to these questions. But first up, let's take a quick look at some of the key promises that have been made by Rekha Gupta. Well, before that, important news coming in yesterday that Rekha Gupta has kept the revenue and finance portfolios, and the question really is that will she be able to deliver on the welfare promises, and can the government really afford them? So let's begin actually by discussing all the schemes that have been announced in the BJP Sankalp Patra and the state of finances at Delhi. Joining us on the show today is Gopal Krishna Agarwal. He's the national spokesperson for BJP for Economic Affairs. Good morning, Mr. Agarwal. Thank you so much for joining us. Sir, the basic question that I think we must begin with is that Delhi is expected to close this financial year. I understand it wasn't the BJP government in Delhi, but this financial year is expected to close with a deficit of about 1,400 crore rupees. Now, these are projections. We really don't know what the numbers will add up to, but 1,400 crore rupees of deficit this year, and it seems that there is going to be a minimum additional expense for the Delhi government of about 15,000 crore rupees for the coming year. What is the strategy? Because as we understand basic economics and basic sort of company operations and P&L statements, you either raise your revenue, which comes mostly through taxes, or you cut your cost. Here we are talking about not raising revenue, but increasing the cost. Mr. Agarwal, if you could unmute yourself, please.
I'm audible?
Yes, you are. Please go ahead.
Yeah. We have to understand how the budget is prepared, because ultimately the size of the budget is very important in any state. And Delhi budget is around 77,000 crores of budget is there. And as you said that there is a deficit of 1,400 crore. What we also have to look into that when we were talking about how we would like to develop Delhi is that we were talking about double engine sarkar. When the state government and the central government align their policies, programs, lot of funds flows from the center to the states. And what was happening earlier with the AAP government was they were not cooperating with the center, neither providing certain datas like Ayushman Yojana. They were not agreeing to implement in Delhi. Then several of the schemes which are tied up schemes which depend upon particularly about certain schemes to be implemented by the states and their performance, based on their performance into those schemes.
Right.
The fund flow from the center to the states, and there was a lot of gaps and lack on the part of the AAP government, and that one thing will be in itself will be plugged by our government. Second important thing is when we are talking of an estimated increased expenditure of 15,000 crore, we have to look into how we increase the size of the cake, how we increase the size of the budget. And if we increase the size of the budget from at least 15% in a year, which is a normal growth for a city like Delhi, city-state like Delhi, where there will be good increase, there will be good scope for increase in the overall size of the GDP, then at least we can increase the size of the budget from 77,000 to 1 lakh crore easily. And the third point is the way AAP government was corrupt, whether it was in the implementation of schemes, welfare schemes, or paying doles to their own workers through giving them the responsibility of being marshals in the roadways, etc. The way the DTC was getting into losses.
Right.
We have seen that public sector undertaking under the Modi government have seen reforms so that the public sector undertaking like DTC, etc., Jal Board, etc., their efficiency, their
Let's
corruption.
come to the public sector enterprises in a bit, Mr. Agarwal. I want to understand more in detail. You mentioned expand the cake, increase the size of the pie. How do you do that? Because the formula is fairly simple. If there is more consumption, there is going to be more tax collection. But that is something that the government alone cannot control. And the second part, which adds to GDP growth, comes by way of government investment. So you're saying the government did not make enough investments during the Aam Aadmi Party really leading Delhi and Aam Aadmi Party being occupying the seat of power, primarily because they were not complying with the government. What exactly are we trying to say here, sir?
No, we have to understand in Delhi, lot of infrastructure investment comes from the central government.
That's right.
Whether it is metro, whether it is roads, peripheral roads, expressways, or the flyovers, etc. All these expenditures come from the central government. And then there is a schemes of Jal Jeevan Mission, Har Ghar Jal. All these schemes are to be implemented in an efficient way in the state. So infrastructure investment is not majorly responsibility of the state government, which comes from the central, and the center is going to do it. Even in the expenditure of the Yamuna, the central government has provided lot of assistance. And the third thing that I want to tell you is about the size of the budget is, under the GST, the states which have high consumption, they get more benefited out of it. So
That's
Delhi
right.
has a huge population, and the consumption is higher in
But
Delhi.
Mr. Agarwal, Delhi has had high population for a while. Consumption in Delhi has been peaking, and you have still seen the kind of revenue collection that the state has done. My simple question is, how does Delhi government increase its revenue pie to either be able to contain the deficit, if not running into a large one, or being simply able to afford all the schemes that have been announced?
No, if you look into our policies in the various states and the center,
Yeah.
we have never reduced the expenditure for the to finance the welfare schemes. Karnataka is doing that. Himachal is doing that under Congress, but we are not doing like that. We increase the size of the revenue budget. In the center also, we have kept a fiscal discipline. Yesterday, RBI report came which praised how the government has maintained, central government has maintained its fiscal responsibility. Increase the size of the expenditures, increase the size of infrastructure investment, increase the size of welfare scheme. At the same time, kept the fiscal deficit by better and transparent and corruption-free collections, tax collection mechanism through virtual assessment.
If I understand you correctly, in the interest of time, Mr. Agarwal, if I understand what you're trying to say correctly, is that there are going to be more grants coming by way of the central government into the state of Delhi?
No, not alone grant.
What else? Apart from what the center provides to the state by way of finance commission grants and the central government sponsored schemes, the state government sponsored schemes, where is the money for that going to come from, sir?
That will come from increasing the size of the budget, and the infrastructure expenditure is not required to be made much by the state government. The state government has to increase the tax collection, reduce corruption in the tax collection mechanisms, and at the same time more compliance in the tax mechanism, and plug the loopholes in the welfare schemes and stop paying doles to your own party workers like the AAP was doing, and increase the efficiency of public sector undertaking. Four things I have underlined: increase the efficiency of the public sector undertaking under the state government, reduce corruption from the tax collections, reduce doles to be given to the party workers in the form of appointing marshals, observers, and volunteers, etc., and reduce the leakages from the welfare schemes and make them targeted, and reduce number of people who are not actually eligible for the beneficiaries, but still due to corruption and various vested interest, they get into the empaneled into the schemes.
Okay.
These are the, and increase the collection through GST and comply more with the transparent mechanism from the state sponsored schemes, and get more funding based on performance based, because center is providing funding to the state government based on performance of various schemes.
Sure.
So automatically it will flow more funding.
Got it. So what you're trying to say is plug in the leaks that were potentially there during the last government, and with that there's going to be a greater transparency in the spread of social welfare schemes. But can I get a commitment from you, from the side of the BJP, sir, that all the welfare schemes that have been promised pre-elections are going to be lived up to? That is my question number one to you, sir. In terms of living up to the commitment and to the promises made, are we sure that all of these schemes that have been promised and the welfare initiatives, they will be lived up to?
Yes, definitely, because it is Modi ji's guarantee. He
Sure.
has said that it is my guarantee that Delhi gets all the promises that have been made by us in our
All right.
manifesto, and 100%. It is not 90 or 98. It is 100%. It will be done
Right.
within the time span that we have promised to.
Okay, and the second commitment I want to bring from you is on the fiscal deficit in the state. Is there going to be a containment of the fiscal deficit, or do you expect the deficit to actually balloon to a much larger number than the 1,500 odd crore rupees which have been projected for this year?
We consider macroeconomic parameters. We don't chase macroeconomic parameter as such as fiscal deficit, inflation, etc. They should be byproduct of our economic policies and measures that we take, and therefore fiscal responsibility and budgetary management is an important part of good economics, and we are committed to good economics and at the same time welfare for the common man citizens and proper distribution of the income for the people. That is our commitment, and fiscal responsibility is what we achieve as a byproduct of our economic policies. We simply don't give if we don't have resources, so that we will divert the development resources to welfare resources. We will try to increase the resources, and through that we will implement fiscal responsibility. Because I look after the economic affairs, this is the policy which has been followed by us in all the states and the center, and
All right.
therefore good economics is good politics for us.
All
and
right.
therefore people are accepting our promises, that the promises are made to be kept
Right,
by
Mr.
BJP.
Agarwal. Let's leave it at that for now. Well, of course, we will know what the collection of revenue for the state happens to be in coming months from now. But for now, let's at least live on the assurance given by you that all the welfare schemes will be delivered, and the state is also going to be self-reliant, if not completely compliant with the requirements of the central government. But thank you so much, Mr. Agarwal, for joining us this morning. And moving on, in a big financial push in another BJP-led state, Uttar Pradesh, under the Yogi Adityanath-led government, the Finance Minister Suresh Kumar Khanna has presented the state budget for FY 25-26, laying out the 8 lakh crore rupee UP budget. Khanna said 22% of this has been allocated for development purposes. The budget mainly focuses on key sectors such as education, that gets a 13% allocation, agriculture and allied services receive 11%, while healthcare sees an allocation of 6%. With a 9.8% jump from last year's outlay, the UP budget 2026 is aimed at empowering various sections of society, including farmers, women and the youth. Some of the big announcements that were made are the Rani Lakshmi Bai Scooty Yojana. Now, 4 new expressways connecting Agra, Lucknow Expressway to the Ganga Expressway in Kausia Hardoi via Furakabad, allocating over 900 crore rupees. Now, an artificial intelligence city in Lucknow, for which an outlay of 5 crore rupees was proposed, and 2,000 crore rupees has also been proposed for cattle welfare. Well, time for a short break right now, but coming up on the other side, a quick mood check of markets as they open today, and also how long will investors continue to reel under the pain of their wealth erosion? Amit Kumar Gupta would be joining us with answers to those.
What does it take to be the greatest in the world? Focus? Composure? Wisdom? But is that all it takes? There is one thing which truly sets you apart. Your inner strength. Sodium TMT Rebar. True inner strength.
We don't need double-digit growth to get to high-income country status.
Our Indian economy being the fifth largest in the world or third largest in the world in few years.
Today at 4 trillion out of about 105, 108 trillion dollar world economy are hardly 4%. But when we get to 10, for example, we will be at least 7-8% of the world economy. And that's when the time when our trillion-dollar exports will maybe become maybe $2.5 trillion. To be Viksit, we need to do all kinds of other things. But high income is what I look at.
It's not a matter of great achievement because India can be the first largest economy of the world with per capita income still being less than the global average.
We can be at in 2050 with average 6% growth from 2022 for 30 years. 6%, not 7%, not 8%, not 9%, not 10%.
The time has come where we build our unorganized sector, that'll build our organized sector and make us more competitive.
मेरा ये विश्वास कहता है भारत की युवा शक्ति का सामर्थ्य भारत को जल्द से जल्द विकसित राष्ट्र बनाएगा।
This and more streaming on News9 Plus. Download now.
Back, you're watching Morning Brief at 9. A quick look at the markets as they opened just a few minutes ago. It's been a gap down opening for the benchmark indices Sensex and Nifty, while some green shoots appear at least in the small cap and mid cap space this morning. Nifty 50 continuing to hold the 22,900 odd level, still about 100 points short of the 23,000 level. Sensex is down to about 75,600 levels this morning. Great news coming in for the small cap space, up about 0.9% or so, holding at about 15,800 for the Nifty small cap 100. The Nifty mid-cap 100 is also up about half a percentage point at about 51,400 odd levels. Volatility continues to be high, up about a percentage this morning to almost 15 levels. Let's look at the Nifty 50 heat map and see which are the sectors which are feeling the pain this morning. Well, bad news coming in from the auto sector. This looks like Tesla pressure perhaps on M&M, which has opened 1.3% down with news emerging of Tesla possibly looking at setting up an EV manufacturing plant here in India. We don't know how far that is, but there could be some fresh announcement by way of the government, as per certain reports, that in April there could be the new EV manufacturing policy being announced. The Maruti Suzuki also down this morning about 0.3%, while Infosys and Wipro also start the day on a negative turn. But the big question that we really want to ask is that with this market volatility and with the overall pain that investors are feeling, how long before the what seems like a bear run right now converts back into some sort of a bull run for Indian investors? Let's look at some data and try and make sense of what is happening in the Indian markets over the last few months. Well, to begin with, the equity market in India is down as much as 13% from its lifetime high that it touched in the month of September, 27th September 2024 to be exact. Now, in addition to that, if you look at data just this year to date from Jan 1st, 2025, the Sensex has crashed over 3%. Now, despite the small cap and mid cap stocks being a little in the green this morning, overall wealth erosion as much as 20% on small cap and mid cap stocks has been seen since the 1st of Jan. Now, investors have lost as much as 45 lakh crore rupees on the BSE listed stocks alone since start of the year. Now, if you look at this data from the 27th of September, when markets were at their all-time high, investor wealth has eroded by as much as 78 lakh crore rupees. So what are the pain points and why is the market in such dire pressure? Well, what seems to be driving the downturn right now are two key factors. First among them being the tariff threats by Donald Trump, and this is keeping FIIs on the edge. FIIs continue to exit India and bet on a much stronger dollar. Now, if you look at some data, $25 billion have been withdrawn by FIIs since the September high. The fund manager's allocation to India is at a 2-year low, and all of this seems to be because of what is happening globally, especially with respect to Donald Trump. But on the domestic front, the Indian story also continues to be weaker than it was projected earlier. GDP growth projection for India for this financial year came in at a growth target of just 6.4%. Now, this is the slowest that India's GDP growth has been in over 5 years, and inflation in the meantime continues to be above 4% despite the RBI cutting the key lending rate, the repo rate. Add to that the pain coming from the corporate sector, just an average of 5% profit growth by the Nifty 50 companies, showing that there is also a consumption slowdown. Well, things could change perhaps in the new financial year with the tax SOPs that have been announced in the budget, which could drive up the consumption story, but that may not be enough to offset the FII outflow. Amit Kumar Gupta, founder of Fintrek Capital, joins us this morning. Amit, good morning. Thanks for joining us back here on News 9. I want to understand basic questions. Markets continue to bleed. Investors are seeing their wealth wipe out. How long is this pain expected to continue?
Hi, Karthik. Good morning. Thank you for having me. The markets are eventually reflect what is happening in the economy, and the broader economic growth momentum has stalled in the past 6 months or so. The impact of the massive COVID stimulus that sort of negated now. Most of the agencies are gradually acknowledging that the real GDP growth might be in 6 to 7% kind of a band. As the latest union budget has also depicted that the fiscal leverage to stimulate growth, that has also mostly dissipated. If you talk about like the central government capex, that has sort of peaked around 3% of the GDP. Even at the state level, the total public capex is sort of stuck at 4.5% of GDP. So the scope of increasing government consumption is limited and completely dependent on how the tax buoyancies happen.
Right.
So even with these aggressive tax revenue assumptions, the government revenue expenditure is not expected to be more than 5% of the GDP, right, which was somewhere 7.5% pre-COVID.
Right.
So my sense is that all these macro drivers of growth, whether it's consumptions, investments, even exports now because of the tariffs, things coming along, they're all facing headwinds. And
right,
at this point of time, it appears unlikely that these will get resolved in the next 1 or 2 quarters.
Okay.
Before we actually start seeing any substantial improvement.
Okay.
So my sense is, this is sort of a consolidation period. We have to see how all these things come together in the next 3 to 6 months, and then I think market would sort of bottom out fundamentally. At least it may bottom out technically a little bit ahead because markets are a little ahead of the economy. But I think fundamentally, sometime in Q2 only of the next financial year, we'll see some fundamental bottoming happening, and then gradual recovery.
All right. Now, I think the basic question that all investors really want to, in addition to a timeline, try and get is what should their strategy be in such volatile markets, and volatility tending to be more negative than positive as days go by. So SIPs, I mean, there is data coming in. There has been a gradual increase in SIPs, but the total number of folios has reduced. So overall, what should be the right strategy for investors in these difficult times? Because the mistake, to my mind, most investors tend to do is they buy high and they sell low. So right now, do you call this a correction? Do you call this pretty much close to the bottom, if not a bottom out? And for those who continue to stay invested, is there going to be a substantial upside as we saw, let's say, 4 years ago when we were just coming out of COVID?
Yeah, right. I think, the current phase is a corrective decline after a very strong 4 years of bull market. This bull market started with the COVID bottom in March 2020, and now have sort of entered a corrective phase since end of September, start of October last year. But I think unlike the phase, let's say, which was there in 21-22 when the Russia-Ukraine war broke out, I think the market dynamics are very drastically different currently. There is much more retail participation, there is much more HNIs and family offices participations.
Yeah.
And, the way the last 6 months of the last calendar year worked out, there was mad rush to IPOs, there was mad rush to SMEs, unlisted space, private markets, a lot of money has gone into that. So I think the market dynamics in general are very different from what it was,
Sure.
4 years before that.
Right.
So in usually such a corrective decline phase, we see both time and price correction happening in stocks.
Right.
I think a lot of the price correction is already there,
Okay.
but there could be further time correction happening, which I said, could be 1 or 2 quarters more. So investors need to pick their stocks carefully, calibrate their cash positions accordingly, and as industry specific data gets more and more clear, then they can look to increase. But my sense is to have some discipline, keep the SIPs going,
Okay.
don't churn unnecessarily from schemes to schemes or from themes to themes. See how newer themes are developing, because every bull market brings new themes, and the old themes actually take a back seat.
Sure.
So the themes like defense, railways, which were the leaders of the bull markets last time, I think that they will take a sort of a back seat. And we have been very consciously, because of high valuations, we have been exiting those kind of stocks in the last year itself.
Right.
But I think because the pendulum has swung now to the different direction, there are definitely opportunities to buy, even fresh at these levels. But one needs to just temper their expectations of a V-shaped recovery in the stocks.
No V-shaped recovery for the foreseeable future. One final question before I let you go. Amit, gold is also at an all-time high, touching almost 89,400 odd levels in India. Should gold allocation increase in your portfolio, or this is the time to actually stay away from gold and not add anything at this value?
No, I think gold is currently driven by a huge central bank buying, which is currently happening. Along with that, obviously there is a lot of uncertainty with what will happen to Trump tariffs negotiation over the next 3 months or so. So gold is a beneficiary of that, but I will not be a buyer at these levels. If somebody is holding from the lower levels of 2,000, 2,020, 200, then they can hold a little bit longer, because I see a 5 to 7% more rally from the current levels as well. But I would not buy fresh on this levels. I would probably in the next 3 months or so, I would be actively looking to actually decrease my gold allocation, as the uncertainty gets removed, because then there will be a surge of profit booking happening. The people who are getting in the long end, they would offload their position. So probably it's a time to actually take the chips off the table, reduce gold allocation a little bit over the next 3 months.
All right, reduce allocation on gold. This is definitely not the time to buy gold, is the word coming in from Amit Kumar Gupta, who's also saying that continue with those SIPs and don't really churn unless you really need to. Amit Kumar Gupta, thank you so much for joining us on Morning Brief at 9 this morning. Meanwhile, markets have improved slightly, and the Nifty small cap 100 index is up about 1.3%. But moving on now to another story we're tracking this morning is that there could be a big relief that could be on the cards for airline pilots, as the Directorate General of Civil Aviation, or DGCA, plans to increase the weekly rest time for airline pilots from the current 36 hours to as much as 48 hours starting July 1st this year. Additionally, night flying hours will also be reduced in a phased manner from November 5th, 2025. Now, these changes are part of the DGCA's roadmap for relaxed duty norms presented before the Delhi High Court. Initially announced in Jan 2024 and set for implementation by June 2024, the new rules were delayed due to strong opposition from airlines. This led to legal intervention by pilot unions and court-ordered mediation. Following multiple discussions between the DGCA, Air India and pilot bodies, a phased rollout has now been agreed upon. The move aims to address growing concerns over pilot fatigue while balancing airline operations. And before we slip into a break, a quick look at global headlines dominating the news today. Donald Trump says new tariffs on cars, semiconductors, pharmaceuticals and lumber will be announced within a month as concerns over rising prices grow. Nearly 90% of Japanese companies fear Trump's policies will hurt business, with trade tariff and US-China tensions emerging as top concerns. Donald Trump says he has a great relationship with Chinese President Xi Jinping, calls a new US-China trade deal possible, but blames Biden for not enforcing past agreements. Meanwhile, China has backed Trump-Putin talks on Ukraine at G20 as US allies rally behind Zelensky, raising global tensions. Wall Street slides as tariff concerns and Walmart's weak forecast weigh in on investor sentiment, with big tech stocks like Amazon, Tesla and Meta also tumbling. Microsoft has unveiled the new quantum computing chip, says breakthrough brings practical quantum computers years closer, not decades closer. Renault reports record operating profit for 2024 as new models boost sales, while Mercedes-Benz sees 40% earnings slump and announces cost-cutting plan amid EV market struggles. Computer and tablet maker Lenovo reports a 20% revenue surge in Q3 as global PC market shows signs of recovery, surpassing analyst estimates with strong AI integration. Elon Musk backs Germany's far-right AfD, or alternate for Deutschland, as country heads for snap election after the Scholz coalition collapse, sparking political backlash. All these stories and more on the other side. You're watching Morning Brief at 9.
You have donned many hats: screenplay writer, director, producer. But who is Kiran Rao?
I am a speck and I am not even a blink in time. Your identity is always sort of defined by the men in your life.
The crux of this imbalance is the financial independence, that disparity in financial independence.
I think marriage needs redefinition. You change your name, not just your last name. Women used to change their name.
Would you ever sit back and think, am I on a springboard? Am I ready to take the next big leap?
Work doesn't entirely define me. I mean, different days I'm the first and different days I'm the latter. If you're not doing the next big thing, then are you even relevant at all?
Watch Radico presents Duologue with Barun Das, Season 3, featuring Kiran Rao, at these times on News9. English news as it should be.
Light, camera, and action. Kick back, relax, grab your favorite snack because News9 is here with your weekend dose of entertainment. It's time to take a deeper dive into the buzzworthy happenings of the entertainment world. From celebrity gossips to exclusive conversations, from nostalgic moments to News9's pick of the week. Don't worry, we've got you covered here. And I hope you've grabbed your popcorn by now because News9's page 3 is here to serve you everything that we call entertainment. So do stay tuned every Saturday and Sunday, 2:30 p.m.
News9.
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 News9. News9.
Now they're relaunching News9.
News9 is coming back. News9 will be very useful for creating public opinion.
It's going to be only truth.
And I wish you all the best. Very happy and all the best.
बहुत अच्छा लगा मेरे को उनको मुबारकबादी देता हूँ.
Congratulations to News9. All the very best.
All the very best, News9.
I wish the channel all the very best.
Let News9 be the voice of Karnataka and India.
You're watching Morning Brief at 9. As the trade war looms, US President Donald Trump announced that he plans to impose more tariffs on key sectors including lumber, cars, semiconductors and pharmaceuticals within the next month or even earlier. While Trump argues the move will boost American industries, many worry these tariffs could drive up prices, adding to inflationary pressures already straining household budgets in the US. Take a look.
Donald Trump says an announcement on tariffs will come over the next month or sooner. Speaking at a conference in Miami, the US president appeared to add lumber to the list of likely targets, and he again claimed that the threat of tariffs was producing results.
A lot of car companies are calling. They called me, three of the majors, they called and they said, we're looking all over the place, we want to be there. I'm going to be announcing tariffs on cars and semiconductors and chips and pharmaceuticals, drugs and pharmaceuticals and lumber probably and some other things over the next month or sooner.
Since returning to office, Trump has imposed a range of new tariffs. That includes broad ones, like an extra 10% levy on goods from China, to ones targeted at specific products like steel. Though Trump says they will create jobs and raise revenue, many economists warn the moves could spur inflation. Minutes of the last Federal Reserve policy meeting, released Wednesday, show policymakers there are concerned that tariffs could drive prices higher. That might halt interest rate reductions for now. And there are signs that some voters share those concerns. A Reuters Ipsos poll found 53% of Americans now think the economy is on the wrong track, up 10 percentage points on last month. Only 32% approved of Trump's performance on inflation, and his overall approval rating fell. Reuters also spoke to voters in Miami and here in Phoenix, Arizona. At least some connect trade policy to rising prices.
Trump imposed those tariffs. He said it was going to be a little pain, and you notice some of the prices going up, food prices going up. He did make those promises that food prices would go down before he entered office.
Yeah, I mean, I think he promised a lot, and then when he got into office, he took away diversity, groceries went up.
There's no sign of Trump backing down, however. Earlier this week, he said an announcement on tariffs was likely to come on April 2nd. And his latest comments suggest that moment may now have moved closer.
Meanwhile, a growing number of Japanese businesses are sounding the alarm over US trade policies. A new Reuters survey revealed that nearly 9 out of 10 Japanese companies expect President Donald Trump's policies to have a negative impact on business. Japan invests more money in the US than any other country, but growing worries could create problems for trade and the economy. Here's more.
Almost 9 out of 10 Japanese companies expect U.S. President Donald Trump's policies to hurt business. That's according to the results of a new Reuters study out Thursday. It's the clearest sign yet of rising worry in the United States' top foreign direct investor. About 86% of 233 companies surveyed said Trump's policy measures would have an adverse or somewhat adverse effect on their business environment. That's up from 73% from the same survey taken a month before Trump took office. Of the firms in the world's fourth largest economy that see Trump's policy initiatives as negative, 72% picked his trade strategy, including imposing more tariffs as the most detrimental factor. Trump has already announced 25% tariffs on steel and aluminum imports, imposed 10% duties on goods from China, and has threatened Canada and Mexico with steep measures that are on a 30-day hold. Earlier this week, Trump threatened tariffs, quote, in the neighborhood of 25% on auto imports as soon as April 2nd. While Japan does not impose tariffs on cars, the U.S. government said during Trump's first term that a variety of non-tariff barriers impeded access to Japan's automotive market. Meanwhile, about a quarter of the companies that said they see Trump as bad for business picked deepening friction between the United States and China as their main concern. Japan, a firm U.S. ally, is also deeply reliant on China as both a manufacturing base and a key market for its machinery and other exports.
And staying with Donald Trump, the US president has said that he still has what he calls a great relationship with Chinese President Xi Jinping, despite tensions over trade and the impact of COVID-19. Addressing the media aboard the Air Force One, Trump acknowledged the competitive nature of their relationship. When asked about the possibility of a new trade deal with China, Trump said it was possible, pointing to the previous deal under his administration, which required China to buy $50 billion worth of American goods. But he claimed that the former President Biden failed to enforce it. Listen in to what Donald Trump said.
I have a very good relationship with President Xi. I think a great relationship with President Xi. But remember, he loves China, and I love the USA. So, right there's a little bit of competitiveness. But the relationship I have with President Xi is, I would say, a great one. It was obviously hurt by COVID coming in. It hurt them, hurt us, hurt everybody, hurt the whole world. But outside of that, I have a very, very good relationship with President Xi.
Are you looking to make
I think he's a very unique person.
Would you make a new trade deal with China? I mean,
it's possible.
One trade deal never really got.
It's possible. Well, we did a great trade deal with China. We did it great for the farmers, great for manufacturers. They had to buy $50 billion worth of our product, and we were making them buy it. The problem is that Biden didn't push them to adhere to it.
And the great relationship that Trump said appears to be a two-way street, even as China has come out in support of US President Donald Trump's efforts to strike a deal with Russia to end the war in Ukraine. At a G20 meeting in South Africa, China supported US-Russia talks while key US allies stood with Ukraine's President Volodymyr Zelensky. Trump has dramatically shifted US foreign policy on the war, scrapping efforts to isolate Moscow and engaging in direct talks with Russian officials. Talks that have largely sidelined Ukraine. His latest move, calling Zelensky a dictator, has drawn backlash from key G20 members like Australia, Germany and the UK. China's top diplomat Wang Yi showed Beijing's willingness to play a role in resolving the crisis, though analysts say China is also looking to secure its influence in any peace deal. With Russia dramatically isolated, Beijing sees an opportunity to strengthen its strategic position in Europe, likely by playing a role in Ukraine's reconstruction and future security discussions. Meanwhile, Trump's administration confirmed it will hold more talks with Russia after a marathon meeting in Saudi Arabia, though Moscow has hardened its stance, insisting Ukraine must not join NATO. Wall Street took a hit on Thursday as fears over tariffs and Walmart's weak forecast worried investors. The sell-off saw major stocks stumble, with big tech names like Amazon, Tesla and Meta platforms also feeling the pressure. More in this report.
U.S. stocks sold off on Thursday, with the Dow dropping 1% and the S&P 500 and NASDAQ both shedding just under 0.5%. Disappointing guidance from Walmart weighed on Wall Street. Its shares ended down 6.5% after forecasting slowing consumer demand. That dragged down shares of its retail peers, Target and Costco. Some big tech shares also took a tumble, including Amazon, Tesla, and Meta Platforms. Rob Slimer is technical strategist at RBC Wealth Management.
I think what we're looking at today is many of the high momentum, some of the leading stocks in the market that have been outperforming for weeks, if not months, are starting to pull back. They are overbought technically. And while I don't think we necessarily are encouraging people to sell all those type of stocks, it's not surprising to see traders take some profits up at these levels, particularly given the big gains that we've had. We see that in the consumer staples sector. We see it in the technology sector. I think those are all weighing on the market here today.
Among other movers, Palantir Technologies, which provides government-related software, shed more than 5% after a Pentagon announcement on Wednesday that it was looking at potential budget cuts for the fiscal year 2026. U.S.-listed shares of Alibaba Group gained 8% following the Chinese e-commerce firm's consensus-beating third-quarter revenue. And toymaker Hasbro jumped nearly 13% after beating quarterly profit and revenue estimates.
Microsoft has taken a big step in the race for quantum computing as the tech giant unveiled a new chip, saying it proves that quantum computing is just years and not decades away. Okay, I beg your pardon, not decades away. More in this report.
Microsoft says it has created a new chip that shows quantum computing is much closer than recently believed. Quantum computers hold the promise of carrying out calculations that would take today's systems millions of years. But the fundamental building block of quantum computers, called a qubit, is extremely difficult to control and prone to errors. Microsoft says its Majorana 1 chip is less prone to those errors than rivals, providing as proof a scientific paper set to be published in academic journal Nature. The chip has been in the works for nearly 2 decades, and has a new type of material. This is Microsoft's Chetan Nayak in a video provided by the company.
It's called a topological superconductor, or topoconductor for short. And this is something that people have hypothesized for decades. But no one had really reliably created this in the laboratory or been able to harness it for quantum information processing.
Google last year showed off its own new quantum chip, saying that commercial applications are only 5 years away. IBM said large-scale quantum computers will be online by 2033. Microsoft did not give a timeline for when its chip would be scaled up to quantum computers that can outpace today's machines, but in a blog post, the company said it would be, quote, years, not decades.
French automaker Renault reported its highest ever operating profit for 2024, marking a strong performance for the company. Meanwhile, German automaker Mercedes-Benz announced a cost-cutting plan after its car earnings fell by 40% last year. Take a look at what's happening on the auto sector.
French carmaker Renault reported a record operating profit on Thursday, beating expectations. That's as lower costs and a string of new launches boosted margins. Renault reported an operating profit of almost $4.5 billion, up 3.5% on the previous year and coming in higher than a $4.39 billion forecast. Its buoyant results were driven by new models, including the popular electric R5 and a range of hybrids. Renault is one of the few companies in the sector to have maintained its targets last year, contrasting with Mercedes-Benz, which on the same day reported a 40% slump in its car earnings for 2024. Bracing for a sharp drop in 2025 earnings, the German automaker launched a fresh cost-cutting plan to revive sales and margins this year. This includes releasing more petrol and diesel models in its new range than EVs. That's after its battery electric sales collapsed by a quarter last year. Mercedes' forecast underscores investors' concerns about its ability to weather a global market under threat from US and Chinese EV rivals. Both Mercedes and Renault shares were down in afternoon trading.
And Tesla chief Elon Musk has taken a more prominent role in the upcoming German elections with his backing of the far-right party Alternative for Deutschland, or AfD. The billionaire's support comes as the country prepares for a snap national election this Sunday, triggered by the collapse of Chancellor Olaf Scholz's three-way coalition. Musk's involvement in German politics has sparked debate, raising questions about the impact on voters and the broader European politics. Here's a look at how Musk is influencing the race and what it could mean for Germany's future. We leave you with that story.
While Elon Musk is playing a central role in the U.S. government as head of President Donald Trump's task force to slash government spending, the world's richest person has also weighed in prominently on politics in Germany. The country is holding a snap national election Sunday, following the collapse of Chancellor Olaf Scholz's three-way coalition. Here's a look at how Musk has involved himself in German politics and what could happen because of it. In December, Musk waded into Germany's election campaign, calling the far-right anti-immigration Alternative for Germany Party, or AfD, the country's savior. He has also criticized Scholz and called on him to resign. In January, Musk made a virtual appearance at an AfD campaign event.
I'm very excited for the AfD, and I think you're really the best hope for Germany.
Speaking just before the 80th anniversary of the liberation of the Auschwitz concentration camp, he also said that Germans should not feel guilt for the sins of their great-grandparents.
I think there's frankly too much of a focus on past guilt, and we need to move beyond that. Children should not be guilty of the sins of their parents, or even let alone their parents, their great-grandparents, maybe even.
Musk also praised the party's leader, Alice Weidel, in a conversation with her on his social media platform, X.
I think Alice Weidel is a very, very reasonable person, and hopefully people can tell just from this conversation, nothing outrageous is being proposed.
The AfD sits solidly in second place with about 20% of the vote in recent polls, but has almost no chance of forming a government because other parties refuse to work with it. Earlier in February, a German court ruled that X, which Musk owns, must release information enabling researchers to track the spread of election-swaying information on the social media platform. This came in response to a filing from civil rights groups who said they need the data to let them track misinformation and disinformation ahead of the national election. The frontrunner to become Germany's next chancellor, Friedrich Merz, told the Wall Street Journal that Musk's support of the AfD went far beyond the usual backing given by politicians across borders. The leader of the center-right Christian Democratic Union Party said Musk's support needs to be investigated, as it could represent a contribution to the AfD, and he warned that Musk will face consequences for meddling in Germany's election.
It's not the fiefdom of politicians. They owe it to the people.
Matter is now more about faith of the millions of devotees than just political slugfest.
Does that mean that I can't get a job in Chennai, although I may be best suited for that particular